Exactly 1 year back, Adani was facing some serious allegations from Hindenburg, and the market cap has taken a nosedive for Adani in the early part of 2023. And if you look at Adani now, the market cap has bounced back. Would the same thing happen with Paytm as well, or Paytm would go down the route of WeWork, which filed for bankruptcy? Hello everybody, a lot has been happening at Paytm since Jan 31st when RBI has come up with a press release stating that Paytm Payments Bank cannot accept any more deposits after Feb 29th. Now, this particular action has a huge impact. You might say, hey, I don't care really, I'll still continue to use Paytm anyways, my movie tickets, etc. But understand guys, there are 330 million wallets on Paytm, and all the 330 million wallets are linked to Paytm Payments Bank. And now you can't put your money in the wallet. That is the actual intensity of the impact that Paytm is facing right now. And I already made a video, I'll give you the link to the video where I stated what was happening with respect to the actual impact that Paytm could be facing. But even since then, the last 1 week, a lot more has happened. So let's dive in and then understand why Paytm's scenario is different potentially from Adani or from WeWork, and where Paytm stands as of today. So the first thing after the Jan 31st meeting was their markets started crashing. And if you look at the stock prices as of Feb 14th, between Jan 31st and Feb 14th, their market cap has dropped by more than 50%. That is 26,000 crores. And what has happened in between? The Paytm founder met the finance minister of our country, and the finance minister had made a single statement that it is between the regulator and the company to sort out the issues, and we are not going to interfere. And then the RBI governor once again made a statement in the last 1 week that, hey, there is no more review of the actions that we have already taken on Paytm. Huge, massive statements from these guys, and hence the stock price continued to go down. And it is not just about valuations, guys. It is also the real impact that is felt on the ground. For example, for every 100 Kirana stores that were using Paytm, 40 have already switched to a different service provider, payments provider. And Paytm was commanding a market share of 69% among Kirana stores, and you can see 40% decline is a huge thing. And another 20% Kirana store owners have mentioned that they are thinking about moving to another payment services provider very soon. While the Paytm's management has said that the overall impact could be around 300 to 500 crores on an annual basis, that's the loss impact, it could be much more. Now, what are some of the advantages of Paytm and why we think that, hey, this is going to go down a very massive black hole? The first advantage of Paytm is that its user base is massive, 330 million wallets. And anybody who wants to promote a product would obviously go to either Facebook, Amazon, or even Paytm. That's the reach. Now, if 40% Kirana owners are moving out, and if individuals like you and me are not able to top up our wallets on Paytm, then this particular reach will gradually come down. We have already seen the numbers, so the impact is not going to be 300-500 crores per annum, but it is going to hit on their key strength, that is the distribution. Now, the other news that has also popped up is the non-banking lenders. What does that mean? That is, companies which can actually give out loans but do not operate as a bank. Muthoot Finance, Manappuram, all these guys use Paytm as a platform to reach out to customers. There are a lot of non-banking finance guys, and news has come out that these non-banking finance lenders have also started looking at other payment providers because of the regulatory issues that are surrounding Paytm. Now, what is this a big deal? Yes, of course it is, because in the last quarter itself, 1/5 of the overall Paytm revenues were coming from these non-banking finance lenders loan distributions arm. That is, you go take a loan on Paytm and Paytm is not giving you that loan. It is some other lender and they have to pay Paytm certain amount of the share. And now those kind of distribution fees is going down. So you can see how reach, which is one of the biggest strengths for Paytm, is slowly crumbling down, and Paytm has taken years to build this kind of reach, and there is no going back. The second strength of Paytm, of course, is the tech stack. Paytm is built on a very solid foundational tech layer, and the Paytm app itself works tremendously well even with 330 million wallet users. However, the biggest catch here is there are no entry barriers for any other player to build this kind of tech stack. PhonePe, BharatPe, Google Pay, all these guys have also built similar tech stacks. So it is not a competitive advantage anymore. Well, it is a strength for themselves, but competitors are also catching up very, very soon. Now, how is this entire fiasco different from Adani's? Well, when the reach goes down, the revenues also goes down for Paytm and the competitors are taking it out. So it is difficult for the customer to come back once again on Paytm, install a wallet and then continue banking with Paytm. Once you lose that trust, especially with banks, it is very difficult, especially with your financial partners. However, if you look at Adani, right, Adani has been operating ports for you to trade goods with different countries, across different ports within India. You still need to go to a port. If not Adani, there is no other option. That is their biggest strength. They operate in a very different world, not in the digital India. A few of their businesses are, but their main businesses are operating outside of digital India, and there are not many easy ways to enter into that market. So even when the valuation goes down, their revenues did not take a hit, and that's the reason why they could bounce back in less than a year. But over here, Paytm, it's not just about valuation. It is also the revenues are going down at the same time. Also, one of the key differences between the Hindenburg allegations and the RBI's press release is that Hindenburg is a third-party company. They can't really enforce any rules or laws. They are just probably playing with the sentiments of the investors and also the different governing authorities. But over here, RBI can actually enforce, and Paytm has to play within the boundaries that RBI has created for them on Jan 31st. We cannot ignore this difference. On the other end, if we look at WeWork does not really have any core strength as such. They were taking buildings, commercial buildings on long-term rents and then giving it to short-term rents for people who wanted as a co-working space. Now, that's not having any real asset on their own financial statements, balance sheets. That's the reason WeWork went into bankruptcy. They did not have any real assets as such. But for Paytm, there are real assets. Their tech stack is actually great. The founder, I believe, is a great asset to the company. The founder has faced multiple battles like this over the years. And he's not a first-time founder per se. He did face a lot of battles before even getting started with Paytm. That fighting spirit will still continue, and I hope he can face this battle as well. But this fight is actually for the survival of Paytm. Now, the question mark that I have for you is, do you think the Indian regulators or the Indian government would have let Paytm continue to grow into a big monster rather than having this kind of a speed breaker? Well, that's a question for you. Think about it for 5 seconds, 10 seconds, and then share your answer. And now coming to my opinion, I believe we have to learn from what we have seen in the US. When Mark Zuckerberg was questioned a lot about data privacy, a lot about how data was used in wrong ways from Facebook, he just came in front of the entire government, said sorry, and came back. The government could not do anything with respect to Facebook. Probably some fines. Similarly, having large monsters might not be helpful for the country because regulators at that point in time can't do much. So in my opinion, compliance has to be there. But different people have different opinions that India does not have such huge startups at this moment. What do you have to say? Let me know in the comments. Thank you so much, guys. We'll talk to you again in the next one. Bye-bye.